All right, I can hear someone typing. I'll just mute everyone. Great, awesome. We are live. Hello, good evening, everybody. We are sitting at the end of October. In 3 days, it's Halloween, and the year has almost ended. For those that don't know me, my name is Zebunisso Alimova. I'm a mortgage advisor in Wellington region. And tonight I am joined by two beautiful women, Zhenya Andrews and Polina Kozlova. So please, everyone, welcome them. Hello. So tonight we're going to cover off a couple of topics. We're going to talk about what it's like to be a first home buyer, what's happening out there at the moment, and maybe cover some of your concerns, anxieties that are going on around how to buy your first home. And then we're also going to ask Zhenya to cover off from her side, from the real estate, and Polina has an awesome information session for us about how to buy a home, well, buying a home with someone and what to watch out for. So without further ado, for those that are joining us in, thank you so much. Please keep yourself on mute. Oops, hold on, I'm pressing wrong buttons here. And if you want to say something, so a couple of house rules before we kick off. If you want to say something, put your question in a chat box. We will come back to you at the end of our session. We will answer your questions as well. If you want to send a message directly to me, you can do that as well in the chat box. And if you want to invite your friends, feel free to share the Zoom link with them so they can join us. We are also live on YouTube. For those that have YouTube account and can join us, hopefully they'll be able to see us there. Awesome, cool. So let's talk about the housing market. We see each month, each week, the rates keep going up. We thought we've beaten the inflation. The reports came back, we have not beaten that. And the reports are showing that next month, the OCR is gonna go up again. When the OCR goes up, a lot of people ask me, what does it mean to them? What it means to them is that the interest rates on your home loan may go up, especially the floating ones. So the ones that are sitting on floating rates, that will go up. But also what happens in the back scene that a lot of people don't know is that as mortgage advisors, we have our own servicing calculators provided by the banks. So when we do your application, we have to enter the numbers in there and the bank gives us the rate that we work off. Just to give you an example, at the moment, we're working off 8%, 8.5% in some cases. So what it means is that in a worst case scenario, if the rates go up to 8.5%, will you be still able to pay off your mortgage? So when the rates go up, the servicing rate, it means your borrowing capacity falls down. So just one of those things to watch out. So if you are sitting on the fence, whether you should buy the house or not, because the rates are going up, the predictions are there, really, it's a double-edged sword. Buy the house if you can, because the house prices are going down, even if you are going to be paying slightly higher rates right now. But it's all, you know, short-term gain. So that's my viewpoint on what's happening. And the other question I got asked today is, how long do you think it's going to be happening? Have we bottomed out? I'm not an economist. I can't tell you whether we bottomed out or not, but we'll ask Zhenya to maybe share some reports with us, maybe not. So my suggestion always to the clients, if you can buy, just buy. If you are in that position to be able to buy a house, you've got a deposit, you've got stable incomes, buy the house. Because nothing can beat having your own asset, your own roof over your head. Right, so for the first home buyers, couple of tips to share. I'm going to talk a bit today. If you want a digital presentation that I've got ready, flick me an email afterwards. I will send you a link to my PowerPoint that I've created. It's like a little booklet that you can flick through. It's got some really cool information in there. So for the first home buyers, basically a couple of changes, not really changes, but if you didn't know about it, may be good. So you can still buy a home with less than 20% deposit. All right, it's still doable. It's still possible. We're still getting deals across the line. It's a bit harder, but it is possible. There is an option through Kainga Aura. So Kainga Aura is a government-funded scheme. It falls outside of the Reserve Bank rules. And the beauty of that is that if you're earning under a certain amount, of income, you should be able to qualify for that grant. So you just go to their grants, and then there is also home loan. Sorry, people going in. I can see videos and stuff. Throws me off my boat. Hi, Sue. Cool. So basically, Google Kainga Aura, or if you want more information, come to me. I'll fill you in. So that's one. Now, the second one is exempted properties. From the Reserve Bank rules, we've got exempt properties, which are new builds. So if you're looking to buy a house, you don't have 20% deposit, look into the new builds, we can make it happen. And funny enough, we just had a client recently that got a new build, one bank said no or asked for 100 million different information, and the other bank said, yeah, cool, sweet, go for it. So this is where the power of mortgage advisors come in, because we know the market well, we know which bank will play the game with us. And just to give you an interesting statistics, before New Zealanders use the mortgage advisors, about 40% of New Zealanders would use us. Now it's about 60%. So it looks like more and more people are coming to us for advice because they can't get hold of the bank, or because they're finally seeing the value of the professional advice. So that's some information for you there. I see more people coming in. This is exciting. I'm just going to put this person on mute, maybe. Oops, oh, mute. Great. So basically, from my point of view, as a mortgage advisor, I am here to help you. We don't charge you a fee for you to use our services. We get paid by the bank once your loan is settled. So my suggestion is find someone like me, come to me, or find someone like me, wherever you are, and get professional help. Because if you're thinking it's not possible, it's too hard, whatever, you might be wrong. Cool. So that's my update. Basically, the rates may be going up. Kainga Aura is still possible. New builds are possible as well. And also, if you're an investor, new builds also exempt. So you don't have to have a 40% deposit for your new build. You can only have 20%. And usually we can derive that from the equity of your property. And again, I can do those numbers for you. Right, so what I'm gonna do is I'm gonna bring Zhenya into this and ask her to have a chat with us as a realtor. What does she see, what's happening on the market, and maybe share some of her tips, because you guys are probably sick of me talking. Here we go. Hi, Zhenya. Thank you so much for joining.
Thank you, and thanks everybody for joining. It's good to see such a great turnaround of people. Just to comment on my perspective, I do agree with you. If you are ready to buy a house, just do it. Don't wait for the perfect moment, because it's really now. I really love the saying that it's not about timing the market, it's about time in the market. So it's really great investment, and it's a long-term game rather than you trying to gain some money out of it. So yeah, it's your greatest asset. So don't hold it off. So I'm just going to be sharing my screen. I've made a little presentation for you all. Is that visible for you guys?
Yep, we can see that.
Cool. So just again to introduce myself, my name is Zhenya Andrews. I'm a real estate agent at Barfoot & Thompson in Auckland. I'm based in the North Shore in Milford area. So today we'll just go through kind of a checklist for first home buyers and hopefully make it clear for you on the whole process from start to finish, because it can be quite overwhelming. And to be honest, like, don't worry, everybody gets stressed out about what to do. So the first suggestion is to set your goals. It can be quite, you know, you can create the list of things you think you need in your first home, and you start listing them. I need this, I need that, I need that. And you later realize that actually those were your wants, because when you do end up buying a house, you only tick about 10–20% of the things you have listed originally. So a good exercise for you is to sit down with your partner, sibling, friend, whoever you're buying a house with, just in your separate times, sit down, take a piece of pen and paper and write down the things that you need in a house in one side and things that you want in a house in the other side. And be real with yourself. Don't be too picky. Really have come down to earth and think it through what you think is a need in a house. And so once you write it down at your separate times, compare your lists, and you probably will find that 1, 2, or 3 things are matching. So just focus on those, and the rest will be more of a bonus. I hope that makes sense. So the next, it's more of a reminder to be realistic. The perfect home doesn't exist, and I'll explain to you what I mean. So I found this image that really really describes what I want to say. So the triangle here is the perfect house, and the perfect house has a beautiful price. It's got all the features that you need, and it's in a location that you really want to live at. So you will probably have to compromise, especially as a first home buyer. You will have a set price to spend on your first home. So you'll probably have to compromise on location or a feature. So just to give you an example, when my husband and I were looking for our first home, we spent very long time, about a year, looking for that perfect house that ticks all 3 sides of the triangle, and just couldn't find it. And you know what, we ended up buying a house that ticked the price and ticked the location where we really wanted to live. We had to compromise on some of the features. So just my advice to you is be realistic. Don't look for that perfect home. Especially if it's your first home, you just really need to get into that property ladder, and then you build your way up to the perfect home. Yeah, so just decide what 2 sides of the triangle are most important to you. The next step, once you know what you're looking for in a house, is to get your finances approved. So you really want to know where you stand and how much you can borrow from the bank, so you know what you are spending on a house. There are 2 really important reasons why you want to make sure you know where you stand. Number 1 is you don't want to miss out on a house you love because you weren't ready. So it's can be quite scary, and that, hey, you just went to open home and this is the house that really ticks your boxes, but you're just not ready financially, and then somebody buys it at the auction, you know, in a few days. So don't miss out. And the second reason is don't fall in love with the house you can't afford. So if you don't know how much you can spend on a house, and then you went looking, and then you found a house you really liked, and then the bank doesn't give you, you know, the mortgage to buy this house. Yeah, it can be a bit of a sticky situation. So just really know where you stand with your finances. And to get that done, you should contact a mortgage broker. Like Zebunisso mentioned, they've got so many skills of negotiating a good deal for you. They do the whole process of collecting paperwork and sending it off to not just one, but different banks to find the best deal for you. And, you know, sometimes clients have gone directly to the bank and they didn't get the mortgage, to later have gone to the mortgage broker who have helped them to get where they wanted to. So they really help you out, and the services are free with Zebunisso, and pretty much every mortgage broker, they will not charge you. So it's silly not to use the services. So once you have got your finances sorted, or are in the process of getting those sorted, you can start looking for houses, and you probably find that the most common, most known sites in New Zealand is TradeMe and real estate. So TradeMe is really #1 trusted New Zealand site. You will probably find that majority of the house listings go on there. Realestate.co.nz, it's quite similar. They just have different features. One of the features I quite like to use for my clients is you can actually outline the area on the map of where you want to find the house in, and it will just show you the list of, just houses in that area, which is pretty cool. You can set up, your filter, your searchers. So you can set up your price, amount of bedrooms, and save that search, and then get it emailed to you every single day, so that every single listing that fits that search will be emailed directly to you first thing in the morning, or weekly, however frequent you want it, which is pretty cool. So you don't really miss out on houses. And there are other sites that you can be using, not as known as trading in real estate, but there are really many ways of finding and looking for a house. propertypress, OneRoof, houdargen, and agency sites. For example, I work in Barton & Thompson. We've got our own app that you can download on your phone, and you can do the same thing. You can set up searches and get things emailed to you, get listings emailed to you daily, weekly, etc. And of course, to combine that all, you can contact real estate agents. So if you've got a real estate agent that you trust, or through somebody, just contact them, and they will help you to go through the whole process with you, help you find a house, and really make sure that you don't miss out on a listing, because it can be quite overwhelming. And I just want to briefly talk to you of the benefits of working with real estate agents. So just like a mortgage broker, it is you get a free advice. So it doesn't cost you anything to work with a real estate agent if you're looking to buy a house. So why not do it? Why not use their services? You get to be the first one to know about the property. Something we do in our branch, not only branch, our company. Before the listing hits the market, goes to online sites, we actually get to preview the houses. So say I've got a certain client who's looking for a certain house, and then I view this house before everybody else does, then I get to invite them in to have a look at it first. So they get, a fair chance of proceeding with that. We can also negotiate for you. It can be quite emotional and stressful when you're negotiating by yourself, on the price for the house you really like. So just involving a third neutral party to do that for you, to not show your cards, it can help. Also, we set up viewings for you. Say you're going away on a weekend, or there is 3 open homes at the same time for the houses that you want to view. This can be arranged. What I do with some of my clients, they will just email me, okay, I want to view these 5 houses. So I will set it up in a row so we can go out, shoot through all of them, and they're free to go enjoy their weekend, whatever they need to do. Just something helpful to help you keep organized. Help with auction strategies. Even if you have previously bid at auction or you viewed auctions, it still can be quite stressful sitting on that seat and raising your head and bidding. So I can help you work through it, or your agent that you work with can help you through it. There are certain strategies you can use. And of course, when you look for a house, you don't see the prices. So it's handy to have an agent, because they can give you a feedback on the price by looking at recent sales, similar comparable houses, and just give you that idea of where this house stands on the price guide, and just be there for you. It's stressful, emotional process, and you will have questions throughout. So a good agent will be there for you day and night, basically. So once you have found a house you like, you're financially ready, emotionally ready, it's time to place an offer. So you probably will find that there are mainly two types of listings out there. It's auctions. So I'll just go through auctions first. With auctions, when you are going out to bid, you have to do your due diligence prior. So due diligence is you have to get everything sorted before you go out and bid. So you have to get your finances sorted. You have to get a lawyer to look through your paperwork, through your LIM reports, through sale and purchase agreement. If you need building reports, you have to get everything sorted before. And on the day of the auction, that's when you bid. And if you are successful, the property is sold unconditionally. So you can't back out. So once you raise your hand and your bid is the highest, you are the future owner. Okay. And so once you have won, usually you pay deposit on the day of the auction. And then you just await settlement, which can be negotiated with, I guess, with the owner. Yeah, that can be flexible. And the other type is negotiation. So you'll probably see a few listings that are sale by negotiation. Sometimes they've got price as well. So when it comes to these two sales, you can do a conditional offer. So conditional offer means if you want to sort your your LIM reports, you do your building reports, toxicology report, anything else, you can place an offer conditional on approval of these conditions. So once you have placed an offer, there are three outcomes from that offer. So first, it can be accepted. So you put a good conditions, good price, and then the owner is happy, they accept the offer. They can also decline your offer, or they can put a counter offer. So say you've given them an offer with X price and they just want a little bit more. So they come back with an offer to you saying, hey, can you give us a little bit more money, or like change your settlement date? And it can keep going back and forth until everybody is happy. And then eventually it gets accepted. Okay, and so whatever conditions you've got on that offer, you have to do your due diligence and satisfy those conditions. You have to do your best to satisfy those. You can't just, change your mind and back out. You have to actually, if say your finances fallen, you have to prove it. There has to be a letter from a bank. So you can't just say, oh, I changed my mind. Okay. Once those conditions are satisfied, you usually will pay deposit then, unless contract states otherwise. But usually that's when it's expected. And again, then you just await the settlement, the fun part. All right. So once it's time for a settlement, usually a week out, few days before settlement, you will get a final inspection. I usually like to bring a checklist for my clients so that we can go through everything one by one. You kind of check for, you check your chattels, pictures, make sure that everything is in working order, all the plugs are working, if lights are there, carpet hasn't gone missing if it wasn't a contract, stuff like that. So there's quite a few fiddly things you have to go through. So that can take some time to go through the inspection. And your lawyer, meantime, on the day of your settlement, will transfer the ownership, the title will be changed, and the funds will be transferred. So when that happens, by law, you become the owner, so you can move in. Some of the costs for you to keep in mind, because you can get quite caught up and don't realize that. This is just some of the costs that I thought of. You just need to keep in mind, keep aside, can be quite expensive and can catch you off guard. So, building inspection, limb reports, if not provided, solicitor fee, moving in cost, and of course rates and insurance. Once you move into the house, these things you will have to pay for. So just keep them in mind when you are looking. All right. That's kind of all from me. This is just a brief brush through process of buying a house from A to B. I hope that made sense, and I try to make it as clear as I can.
No, that's fantastic. Zhenya, you did an amazing job. Thank you. Normally I would go through this kind of presentation, so it was really nice to see you go through that. So
okay, good.
No, fantastic. I hope it was very useful for some of the first home buyers we've got tuned in, and we'll get them. I'm not sure. Do you want them to ask you questions now? Should we get Polina to do her bit?
Yeah.
We'll get Polina to do her bit, and then we'll get all the questions in the chat box, please. Awesome. Thank you so much. That was awesome. Polina, please tell us about who you are. Don't forget to unmute yourself. Who you are, where you're from, what do you do, what's your speciality, what gets you out of bed? There we go.
Hi, everyone. Hello. Sorry if I look at a different angle. It's just being an iPad. I've realized looks a bit, no matter where I look, it's all to the side. I'm a solicitor and I work in an Auckland law firm, Martelli McKeag Lawyers. Our firm does law across the whole range of all sorts of things, from construction to real estate. And I personally do trust law and relationship property law. So yeah, that's what I do, and I guess that's what gets me out of bed. That's what excites me. Dealing with separation sometimes can be exciting when it's not yours.
Yeah, you don't hear people say that often.
Yeah.
Polina, tell me. So just so I'm clear, right, and so our listeners are clear. For instance, if people are getting together, a new relationship is forming, is it a good time to come and see you? Like, what's the best time to come and see you to sort out all these things?
Yeah. The earlier, the better, only because, so basically, legally, it's 3 years when the other partner starts having entitlement to the assets. But it's usually advised that the earlier you get to that, the better, only because once you progress to 3-year stage, those conversations get awkward. Yeah.
I mean, those conversations are not the easiest ones to have from the beginning anyway. I mean, at
anytime.
Least,
Yeah.
So is there a point of setting up a trust?
Yes, there is. There are still quite a lot of reasons to set up a trust. And I'm thinking, do you want me to open the PowerPoint, or do you want me to just talk through it?
You've got your PowerPoint ready. Go for it.
Yes, I do. So people can write things down or screenshot if they need to. So I need to share. A minute. Share screen. Go on there. Can you see that?
Yes, I can. And I can see myself. Awesome. Double.
Oh, that's right. I think whoever talks, right? No, maybe not. I can see you too. So there we go. All right. So hopefully it's not going to be boring. I've got quite a bit of content, but I'll try to go through it quickly. So basically, your partner is entitled to half of what you consider yours. What a lot of people don't realize is that once you become in a de facto relationship, and that is classified as people living together after they've been together for 3 years, that means you have to be living together. It's very rarely where a relationship can be classed as a de facto relationship and the couple is not living together. Generally, on separation, all property of the parties is split equally, and there are only a few exceptions to that. property occupied as a family home is shared equally. And it doesn't matter how much each party has put into the purchase price. So what often happens is the one person puts more money than the other one, for example, into a deposit, and quite often people contribute in different shares to the mortgage repayment because one person earns more than the other. Unless you have a proper agreement in place, should you separate 5-10 years time, doesn't matter, the property will be split equally, even if one put $500,000 into it and the other put nothing. And that also applies even if a property was owned prior to the relationship, something that is quite different in many other countries, especially civil law countries, but in New Zealand, that's how it is. There are talks about the law. I mean, there are not talks. It's actually currently being reviewed, and the law has been revised, and it may change. And one of the changes that's proposed is that if one person actually owned a property before the partners met, that property, the value of that property as of the day the relationship started, should be separate property, and it's only the increase in value that will be shared should the parties separate. It's been driven obviously by people being disappointed with the current state of the law, because the current situation means that unless you have an agreement in place, that's how it's going to be. And a lot of people think that's not right, because it should be that's what's yours before the relationship should remain yours. What a lot of people don't realize is that income, Kiwisavers, all savings are relationship property, and they split half-half. Even if your income goes into your separate bank account, that is relationship property as well. Before I move on to the next slide, I think why I wanted to talk about is because I have so many clients who come to me at a stage of separation, and the first thing they say is that, well, they just wish they knew this before, they knew this earlier, so they wouldn't have to go through what they have to go. And in terms of properties, quite often you see relatively young people separating, and it's usually the deposit. And it's even more sad when the deposit was contributed by parents, and it's parents who have to get involved in the separation as well, trying to get their money back, because of course parents quite often advance money to their kids on the assumption that if you stay together, it's yours, but should you and your partner separate, we want that back. One other thing I wanted to note is that although our New Zealand law provides that a lot of the property that you had prior to relationship commencing is your separate property, unless it's family home, it inevitably does become relationship property if you've been together for long enough, only because there are all sorts of rules about, the partner, the non-owing partner, sustaining the property, contributing to increasing its value, looking after the garden, painting the house, the property. That's what all those actions provide that entitlement. The good thing is that inheritance is separate property, unless it's been intermingled with your relationship property. So if you do inherit assets, what you should do is keep them separate in your separate bank account. Don't use them for your relationship property purposes. And usually where problem happens, of course, it's properties. If you purchase a property and you and your partner live in it, even if it's a badge, you use it as a family badge. Or if it's, real estate's usually what people, use the money for. But if you buy shares, you use income from those shares to sustain your relationship. So all those things are something to look out for. Gifts are separate property, and if you acquire any property as a beneficiary from a trust, that is also separate property unless it's intermingled. I'll skip through this part. A lot of people still think that having assets in trust protects from relationship property claim. They used to be so, but not in the last 5 years or so. It's been a very popular thing now to what's called trust busting. And the consensus is that even if your property is in the trust, you should still get an agreement in place. because there are many ways to still get into the trust. So the only way to protect it is to have both in place. And if you have to choose between the two, it's advisable that you get the agreement in place rather than putting the property in a trust. A lot of people obviously choose the trust because it's less awkward. Your partner doesn't need to sign any agreement, but it doesn't protect to the same extent. So what can you do about it? So say you're purchasing a property with your partner, and either you have unequal deposits, or parents are helping out, or maybe you have different incomes. Maybe one of you is earning significantly more than the other, and you want to make sure that if you pay bigger part of the mortgage, you won't have more entitlement in the property. What you can do about it, the only thing you can do about it is having a contracting out agreement in place. So that's called, also known as prenup, and it's a formal agreement that sets out your rights. It's not enough to just register the property in unequal shares, just so you know. So if you register, 60% as party A owing and 40% is owned by party B, should you separate, party B would still be entitled to 50, notwithstanding what's registered on the title. So in other words, registration of the title means nothing. Relationship Property Act overrides that. Process of signing up a prenup. So it is quite an involved process. It's not just a matter of signing an agreement, like you would sign a sale and purchase agreement. Just get the lawyer to prepare, put your signature. It's not like that. It's each party needs to have their own lawyer. And what happens is that you would go to a lawyer, give you instructions. The lawyer would prepare the agreement. You would give it to your partner, or the lawyer would send it across to your partner's lawyer. And then that lawyer would have to meet with your partner to discuss and give advice. And depending on how many years you've been together, disclosure might need to be exchanged. So what disclosure is letting know the other party how much is in your bank account, how much is in your Kiwisaver, what else you own, so the lawyer to the other party can actually advise them what they're giving up. And that's very relevant to when you've been together for a long time, because if you've been together for over 3 years, your partner is already entitled. So they already have entitlement to potentially some of those assets. So before the other partner can sign the agreement, the lawyer has to advise them of what they are giving up, what they might potentially be already entitled to, and what they're giving up. And why those agreements are such involved for lawyers is because it's not just the two of you, the partners signing the agreement, it's both lawyers who have to sign and certify the agreement. So that's why lawyers have to provide proper advice, because pretty much every time I'm certifying an agreement for someone, it's almost like signing your life. You actually undertake a lot, that you have seen the disclosure, you know the assets of the other person, you have advised your client what they're giving up and what they're potentially entitled to. So that's why it's not cheap. But it definitely does pay off in the long term, and a lot of people stand by that those few thousand that you need to spend on this agreement definitely outweigh the cost that you would incur should you separate. Or mind you, it's not just separation, it's actually if one of the party dies as well, where disputes arise. A lot of people think prenup is something that's quite, it puts you down, it makes you, the other partner, not want to give you assets, but it's not quite like that. Quite often, signing a prenup is actually better than non-signing a prenup, because in many cases, prenups, they provide a lot of rights to the partner, and not even necessarily less than what the legal entitlement is. It's just giving certainty to both parties, to their relatives, so there are no disputes should one die or should you separate. The other topic I'll just briefly cover is trusts. I always have a lot of questions about trust, and especially because there's spotlight on trusts. A new act came out a few years ago, came into force January 2021, that makes it even harder for trust to be operated. It's to do with the reporting requirements that trusts are under, and the costs involved with that. So some of the good reasons to have a trust, a lot of New Zealanders, it used to be fashionable to have a trust, and the trend now is that a lot of those people closing the trust because they realize they actually don't have a good reasons to have a trust anymore, or maybe they actually never had a good reason to have a trust. It's just that was popular, all their friends had it, so they had one. But the good reason's still there. So one of the reasons is credit protection. So for example, if you have a business risk, shielding your asset in a trust can provide you from your creditors can provide you from creditors going after your asset, provided you set it up in a trust way before you actually have any risk, before you have any existing risk. Succession planning in blended families, that's probably one of the most important, and that's when you have children from previous relationship and you want to make sure that you provide for them. So not all assets going to go to, say, your next partner and his kids, that your kids from your first marriage would be provided for. Shielding wealth from claims against personal estate. So what I mean by that is that having assets, when you have asset in the trust, you no longer own it. So you give it away to the trust. And when you do your estate planning, you would usually have a will in place, and the will deals with your personal assets. So assets that are actually in your name. You can't give away assets that are in a trust because they're no longer yours. And interestingly, in New Zealand, this is one of the ways you can disinherit your kids from your estate, by transferring assets to the trust. So if you transfer assets to the trust on your death, there are no assets in your personal estate, which means they can't make a claim called the Family Protection Act. So that is a claim for provision for kids. If kids successfully argue that they should have been provided from their parents' estate for moral reasons. And we see quite a lot of clients putting assets in trust for that particular reason, and it's usually when there's a breakdown in relationship or the kids are estranged. Parents haven't seen them for 20 years or so. Then I've mentioned they provide some protection from relationship property claims. It does, but you should always seek legal advice because every situation is different. Last reason, well, probably not last, but last of the ones I've listed is tax. There are still tax benefits, especially with the new 39% tax rate. If you have an existing trust which you've had for a long time, and which you haven't opened just now to avoid the tax, you will have potentially good ways to lower that tax for yourself. But there are many other structures in terms of when trust owns shares in two of the companies, say you operate, and because both companies are owned by one trust, you're able to move money around in a way that you won't be able to move money between the two companies if there was no trust. The other thing is if the trust actually earns money, and you have children who are not earning much, your trust, you may be able by distributing funds to your children instead of yourself, and that way you'll be paying lower tax rate. So that's something that accountants are best to advise on, but those benefits are there. And not so good reasons to have a trust. That is, my friend has one. It's a cool thing to do. Not a good reason anymore, because a lot of costs are involved in running the trust. If you just set up a trust of which you are set for a trustee beneficiary, it's just as good as not setting up a trust, because it doesn't protect. In most cases, it wouldn't protect you should things go bad. Most trusts to have proper protection need an independent trustee, or if there's no independent trustee, they need to be set up in such a way that you have very little control of the assets, and it's about drafting the trust deed. So yeah, reporting is expensive. So if you don't have good reasons to have a trust, then you shouldn't have it, or you should look at, if you have one, you should look at winding up and putting assets in your personal name. It's not a good reason to have a trust anymore for residential care subsidy protection. It used to be, no longer the case. Ministry of Social Development looks right through trusts and puts all the assets you have in the trust into the assessment. One more, holding assets that devalue. Assets that devalue generally shouldn't be in the trust because it's a breach of trustees' duties, which the assets that should be in trust are the ones that go up in value because trustees are subject to power of investment. And last one is you should have a trust just solely for relationship property protection. You should consider contracting out agreement instead, and that potentially would be cheaper for you. So, you probably should look at rather putting an agreement in place, which might cost you a few thousand, rather than having to pay for the trust reporting for years to come. And I think I'm on the last slide is just on the important considerations in terms of running a trust. I always say to clients, setting up a trust is easy. It's the management that's the key to protection. Anyone can set up a trust. You can go to accountant. In fact, you probably can find something online. And please don't use that because it's really it's really bad. But it's easy to set up a trust. It's not expensive. It's the management that's the key. Because should you have a claim from creditors, from your partner, from any of those, or from your relatives for that matter, what they're looking for is the management of the trust. Because if whoever's claiming against the trust can show that you were running the trust and dealing with assets as if they were your own, your trust would likely be found invalid or sham or all sorts of things, and the creditors or the claimants will be able to get to the assets. The only way the trust does protect you if you have your managed reporting right. If you record all your decisions, all your resolutions, you meet with your trustees, and you don't treat those assets as they are yours. The trust is set up for the benefit of beneficiaries. So if your kids are beneficiaries, your grandkids, it's them who you should have, who you should consider when you make decisions. And that's becoming a bit easier because now with the new Trusts Act, one of the new obligations is that you have to make disclosure to beneficiaries. And if you haven't already, please look at that, because if you just ignore it and don't disclose to beneficiaries when you're supposed to do under the new law, that's just one more reason for why your trust won't withstand the time and may potentially not protect you in the way you hope it does. And one last point, depending on the level of risk, you may need a professional trustee. So if you have a lot of business risk, for example, if you have a business and there are a lot of risk involved, you should consider having a professional trustee, because that does increase protection, does increase the cost as well, but does definitely increase the level of protection you have, because whoever that professional trustee is, a lawyer, an accountant, they will ensure that the trust is administered properly. And thank you for listening. Hopefully that might have been helpful to someone. That's me.
Polina, thank you so much. That was absolutely fantastic presentation. I'm just going to check that people are still with us. So if someone learned something new, can you please send us an emoji? So there is a reaction at the bottom of your screen, or if you're on your phone, there is a reaction button. Awesome. Having a crying face from the moderator. I'm not sure if that's crying or smiling. Right. Oh, yep. There are some in the chat box. Anyone else? Have you learned something new tonight so far? Oh, yep. Cool. Seeing some cool faces there. Perfect. Awesome. So let's get on to your questions, guys. I see there were a few that sent through to me directly. I've got a few for Polina to start with, I guess, because it was fresh and was talking about the trust. Can you tell me, so there is a question about how to protect generational wealth through trust. So for instance, family has multiple children, multiple assets, and they don't want, if the parents pass away, they don't want the children to waste all the assets. Is there a way to set up a trust that will protect them, and what sort of trust it should be?
Yeah, that's a good question. It's possible, and there are a few ways of doing that. One is a trust that you set up during your life, and that's what my presentation was based on those trusts. You're alive and you set up a trust. The other type of trust is called a will trust. So that is when within your will you create a trust, but that trust only comes into effect when you die. So people quite often create that for young kids. You know, if you have young kids and you say, if I die, I want this people to look after my kid and hold this in trust for them until they turn 30 years. So that's trust within a will. So these are the two types of trusts, and it's definitely a good idea. A lot of people, one of the reasons people do keep trust, actually for some people that is the only reason, is because they think if they die, their assets will pass to their kids. And there are a few reasons why they want to keep the trust. One is because they quite often, a lot of clients have, you know, especially if there are quite a bit of assets, they will have a professional trustee there, lawyer, an accountant, might be a friend who, you know, who just knows something about them and how to run their assets. So when the kids actually inherit that, they inherit it, but there is a level of control. So there is someone to say, to veto those decisions, you know, to talk with. The other reason being relationship property considerations. If inheritances goes from the personal name of the deceased to the child, there are more chances that that child's partner can potentially claim against them in the future. Because what happens inevitably when you inherit something, you usually end up using it together with your partner for your family. You don't tend to keep it in your personal bank account because, well, you only live once. You need to do something with them, right? So it's just natural. So if it's in trust, it's just harder. It's not 100% protection, but because the trust was established not by the partner but by the person's parents, and because making a claim against the trust is more challenging and more expensive than making a claim against your partner personally. So a lot of people, even they want to make a claim, they might not be able to afford it, or they can't be bothered because it's too difficult. So yeah.
I'm on mute. Thank you so much. Hopefully that answers the question. Is it hard to be a lawyer in today's world?
It's fun. I don't know. I love it. So it's not hard. I mean, I think the hard part is all the reporting obligations. That's what I would say.
Yes.
Probably had to be, yes, in the last 5 years, all the anti-money laundering, customer due diligence, all the exchange of information between the countries, and the lawyers having to report on that, lawyers, accountant, banks. You know, the banks reported, we have to report, collect the information. I think that's what makes it hard. It's not something you thought you would be doing as a lawyer. Yeah, getting all that information from people and passing it on to IRD. But other than that, no, it can be challenging at times, but it's really exciting.
Yeah, you look like you really love what you do.
Yeah, I do. Yeah,
that's awesome. Zhenya, I've got some questions for you. What is the mood in the market? Like how busy the weekends are and stuff for you? What are you seeing at the moment across, not just you, but across, you know, maybe your colleagues and stuff like that?
Yeah, I can definitely see there's a bit more new builds now because there was a law. I mean, council's restrictions have loosened up, and now you can actually build in urban areas. You can build 3-story, freestanding houses without resource consent. So because of that, you will see lots of new builds popping up here and there. So that's that. And just overall, there's definitely more first-home buyers on the streets, which is amazing to see. Finally, time for them. Yeah, that's just my personal experience on what I'm seeing. But yeah, from my colleagues who deal with developers, for example, they don't see much movement just because quite a few of them have purchased lands and working on projects, finishing up projects that they have started since COVID times. So they're not rushing and buying more land at the moment. So they're just trying to finish up what they've got, especially with all the delays on materials. Yeah, there's lots of backlog. So yeah, that's what's kind of going on. So if you do have like, or know somebody who's got, say, amazing piece of land, now is not the greatest time to sell to a developer because lots of them are sitting low.
Yeah. Okay. And I mean, as I said in the beginning, from the finance point of view, having new builds definitely a good idea. But I'm just slightly worried if Auckland has overbuilt, oversupplied.
Yeah, I did hear something like that on the radio, that there is a worry of overbuilding, housing. But it's good to see that people can finally afford, housing, because it was very, a few years ago, you just like not even think about buying a house, where now it's more achievable.
I was just saying to someone the other day, what happened to all the people that slept in the cars? I mean, we don't see any news about it anymore. You know how there was always on the news, that people are sleeping in their cars. So I don't know, where did they go? It'll be interesting to find out. All right, so are the prices going up or down? I don't know. The price is going.
Well, since the beginning of the year, the prices have dropped by, I'm talking Auckland-wide, by roughly 10-15% from CV price, but they haven't. So since they've dropped in about March time, and they have stagnated since. That's what I've been observing. So it depends really on the property. A good property still sells. So if you go at auction, you will find, majority of them still pass in, but a good property will sell. So it's really, just matter of, the state of it. So majority of them sell around or just below the CV. On odd occasion, they will be just above the CV. Yeah.
Okay. Thank you so much. There are a few more questions, but just in the interest of time, because we're actually almost up to an hour, believe it or not, ladies.
Oh, wow.
Yeah.
That flew by.
It flew by, absolutely. I really, truly enjoyed having both of you tonight. Thank you so much for the wealth of knowledge that you shared. I really hope that our listeners tonight learned something, and this will be shared on YouTube as well for people that couldn't make it. They can rewatch it, and hopefully if they need anything, they can get back in touch with you both. And it was a fantastic idea to share your details in your PowerPoint, because then they can press a pause button. The cat always joins me in this webinars. And if it's not the cat, it's the dog. And if it's not the dog, it's the kids. So I guess people are already used to it by now. So yes, I really hope that people have learned something new. And if they've got any questions, I hope they will come back to you ladies or to me, and then I can redirect them both. So thank you. Have a fantastic night. Let's be positive. Hopefully the world will change to better, both here in New Zealand and everywhere else. And hopefully this rates will just stop scaring everyone, whatever happening. Oh, I see new people logging in. Oh, cute. We almost finished.
Go to YouTube and watch it again.
Yeah, go on to YouTube and watch again. Alina, thank you for joining, but we're pretty much finished. So thank you, everyone. I'm just going to end the meeting now. Have a fantastic night. And if you need